Hello everybody, it's Larry Sprung. I'm coming live to you from Orlando at the TD Ameritrade conference where I've been for the last few days. But at the same time, I want you all aware that I am aware of what's going on in the markets and what took place, especially today, seeing a 600 point plus decline. And I want to make sure I address that to you. We will be posting an advisor commentary to all of our clients' web portals. So if you're already a client, this has already been addressed. Log into your web portal and check out the advisor commentary. For those of you that may not be clients or are thinking about becoming clients or just haven't logged in yet, let me explain to you what we think happened. Number one is, if you look back at the last 14 months, we've seen incredible gains in the market. So it's not uncommon for us to see a decline like a day like today. And at a 25,000, 26,000 Dow, it's about a 2.5% decline, which is most likely less than what we saw in the month of in the month of January as a gain. So, you know, when things are going up as well as they have, it's not uncommon to see this kind of pullback. Number two, interest rates. We saw a tick up in interest rates today, which spooked the market a little bit. And some of that interest rate movement was due to the jobs numbers. So being good. So that's a double-edged sword, because the employment numbers come in good. Then the fear is maybe inflation starts creeping in and maybe interest rates need to go up. So interest rates did rise today, and we're not sure where they're going to be going. So there's a little bit of a concern there. And I think the third thing that took place today was that Janet Yellen, today was her last day as the Fed chair. So we have a new Fed chair starting on Monday, and I guess there's a question mark, although we have a pretty good indication as far as what we are to expect with regard to interest rates. But whenever you have somebody new, and I always tell you, if you're a client of mine for a long time, you know this, the markets can always deal with good news, obviously, can digest bad news. What it does not like is uncertainty. We have a new Fed chair coming in, and although we have an idea of what his policies will and should be, that will all come out in the wash over the next several months. So what I would say to you is this: I think it's a long overdue little correction here. If you need to make a contribution for tax purposes for 2017, now may be the great time to do it and take advantage of the pullback. And if you're like our clients, you're not a trader, you're a long-term investor, so this minor pullback should not have a huge effect on your situation. But I will tell you this: if your situation has changed and you haven't communicated that to us or your existing advisor, that's something that you will want to do in the coming days to make sure that your plan is in line with where you are expecting to be. But again, if your long-term plan hasn't changed, chances are, as far as it looks right now, this should just be another blip in the road. And it might be a good, advantageous time, if you have money sitting on the sidelines, to take advantage of the pullback, because who knows how long this is going to last. But like I said, we'll be watching this very closely. I'm in Orlando, I'll be flying home tomorrow, and we'll be watching what happens over the weekend. And if you have any questions or concerns, feel free to call the office, schedule an appointment, schedule a phone call. We'd be more than happy to talk to you. And have a good weekend. And I don't think that this should really affect any of your plans. You should all get a good sleep tonight and really not worry about it at the current time. Look forward to speaking with you soon, and have a great weekend.